Hey, what's up, everybody? I hope you've been enjoying a pretty volatile week where we saw Bitcoin drop below 30K for the first time in, I believe, 4 weeks or so. May have even been a little bit longer. Don't quote me, I didn't check right before hitting record here. Um, but yeah, it dropped below 30K, jumped right back above 32K. It now sits at about 32.6 at the time of this video. Um, and I wanted to look over one of my personal go-to metrics that I try to look at when I make insights, post something on Twitter or just talk about during our This Week in Crypto call, which we'll be doing in about 10 or so hours or so. Um, Circulation is essentially the amount of unique tokens that are moving from address to address on any given network. So long story short, it excludes something like wash trading, right? Because we'll often get data that looks kind of manipulated when you look at fundamentals, and it's one of the reasons a lot of people roll their eyes and say, oh, all you need is support levels and resistance levels, and all of this fundamental stuff isn't as useful as it sounds or people make it seem. They're wrong. It actually is as useful as people see as it seems, and as a lot of people are increasingly saying about it. Um, the reason circulation is such a good metric is because it is looking objectively at just the overall amount of tokens within a network and judging exactly how many of them are actually moving around from one address to another. It's slightly different from daily active addresses, but the two lend to each other very closely. This is more basically just analyzing the tokens themselves that are being moved rather than just analyzing the total amount of addresses that are interacting on the network. So it's, they're they're very tied to one another, and usually when active addresses are going down, circulation is going the same way, but not always. Right now, they've both been going in kind of a negative pattern. We talked about address activity quite a bit in previous weeks, so I'm going to skip an update on that for this video, but I will show you what we're seeing in terms of Bitcoin's circulation right now. The pink line here is the day-to-day amount of unique tokens moving on Bitcoin's network on a day-to-day basis. You can see that there's obviously going to be some volatility. Weekends, I can tell you probably just by glancing at it that most of these low dips are simply just weekends where there's less circulation overall, and that's a natural occurrence. But overall, like if you use something like a trend line, like I'm using here, this is just a last 30-day trend line. You can clearly see that there's been some pretty big downward movement that started right around late May and actually was probably a self-fulfilling prophecy after this dip happened a couple weeks before it, and people started to get really stagnant starting right around here when they saw this dip or this bounce not really lead to much excitement. And this, anytime there's a big dip and then a mild bounce that ends up not really turning into anything that exciting up here, people tend to get really turned off. And it's pretty typical for people to get stagnant and fearful, and not want to make any false moves that they would regret later. And when people are fearful of making a regrettable move, that's when stagnancy and timidness in the markets occurs, leading to declining circulation, which we saw here. Overall, you can ignore this very last spike, by the way, because this is an incomplete date. This will probably update in about 2.5, 3 hours. But for now, you can call this kind of the last mark. But even still, you can see a pretty clear downtrend that's been going on since the last week of May or so. And we have a model that actually uses circulation and compares it directly to the market cap of Bitcoin at any given time. Give me just a moment to pause this so I can update the chart. All right, so this is our NVT analysis template that we have available for all of our Sandbase Pro users. If you're paying that $44 or $49 per month membership, you have access to a Sandsheets API, which you can simply get from the add-ons tab, going to the Google Store, and entering your API key after you get the app. So basically, once you have it, you can make a copy of this template. I'll leave the link in the description of this video. And once you make a copy, you'll be able to plug in your own API instead of being stuck using the Sandbase API, which won't load it for anyone but staff members, which is why you need to make your own and why you need to have a Sandbase Pro subscription. Long story short, though, once you get that all up, you'll be able to see a chart that looks just like mine. It's pretty intuitive, but there's obviously a lot of lines going on, so I'll try to explain exactly how this all works. Green bars are an indication that the amount of circulation, which we just talked about here, is looking historically bullish or is above the usual expected amount based on where Bitcoin's market cap is at the moment. So when it's green, that means that token circulation looks very promising compared to where prices are. Prices and market cap, of course, usually go relatively close together. This is comparing to market cap, not price. When things turn greenish yellow, that would mean semi-bullish. Yellow is neutral. Orange is semi-bearish. And of course, these long stretches of red would be the times that it's dangerous to be in Bitcoin. And you can tell right away that there is a declining price correlation to when things turn red and there is not enough token circulation historically to where the market cap is sitting for Bitcoin at that time. You can see over here, these are our most recent months. We have March, April, May, June, and currently July here. Look at July's horrible, horrible high red bar. High is bad in this case, low is good. These trend lines here dictate what high and low actually is. So over time, you can see that these trend lines are going up because the ratio tends to take less and less for prices of Bitcoin to continue to rise. It's related to the way that supply is increasing, things of that nature. But long story short, even with the rising trend lines here, this red bar is well above it, and right now it's the worst NVT mark that we have had ever, at least in terms of the last 4.5 years or so that this chart is tracking. We're looking really bad. You can see these hash marks here. We have the last day right here showing it was very high yesterday. 2 days ago, still very high. 3 days ago, even worse than the previous 2 days. And then 4 to 10 is just kind of an average of the last the week that was outside of the past 3 days. So right now, we're clearly not getting enough token circulation compared to market cap. Going back to this chart, that's basically what this chart confirms. Even with prices kind of dawdling around 32,000 right now, token circulation is worse now than where it was, a week or two ago when we were at about the same prices, maybe a little higher, but at least token circulation was, getting a few high spikes like this at the beginning of July. We had consistently high back in toward the end of June, but we're not getting the level of unique tokens being moved right now to be encouraged by this. Now, of course, as I say with any of these metrics, it's not an end-all be-all metric that is going to say if the bar is red, prices must go down. But if you're playing the odds here, you look at these long stretches of red, that's when prices tend to drop. Long stretch of red here, prices tend to drop. And then as soon as it turns green or something like this, and of course, there are exceptions. Red prices did manage to move up slightly here. It wasn't amazing, but it was something. So of course this isn't perfect, just like I'm saying. But look what happens when it turns green. That's basically from October to February. This previous October to February, when we of course eventually got up to our all-time high, just as it was starting to turn into red bars. But the green is what propelled it and allowed the FOMO to take place even when token circulation was starting to grind to a halt in March and April, and the all-time high inevitably was made in mid-April. So where we stand now, not good. This pretty much guarantees that July is going to end with an average bar being solidly in the red. Even if we started seeing some very encouraging signs like this, I'm recording this on July 22nd. There's 9 days left in the month. It's not going to be enough to turn this bar into anything but red right now. That's going to be our 5th straight month of bearishness. Generally, these bars work best in predicting what direction the price is going to do in the next month, because it's of course a macro indicator. This is not a day-to-day indicator. It's more of a zoomed out, 30 to 31 day at a time type of metric, where you're supposed to look at things from kind of a macro, zoomed out, how is the market health looking kind of perspective. So yeah, that's pretty much all I can say right now about NVT. I'll give you a quick glimpse at what Ethereum looks like just for comparison. And as we can see, Ethereum was just through the roof bullish from May 2020 all the way until May 2021. We had about a 13-month straight stretch that culminated with obviously an all-time high occurring in mid-May, just like Bitcoin's all-time high occurred in mid-April. Ethereum is arguably even more predictive when it comes to this chart. I think that it is very, very accurate when it comes to predicting how the months are going to play out as long as circulation is healthy. And right now, we are back into semi-bearish territory. This is our 2nd month here in July, where we have a yellow-orange signal indicating that we aren't in danger zone yet, like we are in Bitcoin, but we are definitely not getting enough circulation. Now, an encouraging sign might be the fact that the 1-day signal right here, this indicates we actually had a very good day of token circulation just yesterday, the last full day of data that we have. But we would need to see a few more of those days to close out the month to maybe get a neutral signal right now. Right now, as it stands, we go by what we have available, and that's the fact that we are in orange semi-bearish territory. Yeah, I'm going to end it there. Just keep in mind, you can make this chart for any of the dozens or even hundreds of different assets that we have on Sandbase. So you can basically go to this cell, A26, and this one on G26, and you can see the formula right here that says Ethereum. I could change it to something like Chainlink, and after a few minutes when it loads, since this is a very data intensive model that was made, it'll automatically pop up Chainlink data instead of Ethereum, and you can see exactly how that's looking. I also have plenty of different tabs available. So like Link, let's see if it's loaded. Yeah, it is loaded. So you can see right now, Link is kind of in a neutral spot right now. These are yellow signals after it was basically green for 15 or 16 months. But you guys can check it out on your own, see how various assets are looking. Get Sandbase Pro, even if it's just for a 2-week trial. I guarantee this kind of model is very useful, and it's something that myself and at least a few other staff members on our team check on a regular basis. So if you have any questions, let us know in Discord. I am happy to talk about Sandsheet stuff anytime. And I just think that NVT and token circulation in general is a highly underrated metric that we're still kind of scratching the surface of and figuring out how many layers of usefulness it has for the crypto community. So thanks for checking in with me, guys, and looking forward to talking to you all very soon on our This Week in Crypto call. Later.